This is Akashvani. In the program Spotlight, now we bring you a discussion on India, the fastest growing economy. The participants are A.K. Bhattacharya, economic analyst, and Rajesh Lake, anchor.
AKB, the S&P Global Ratings predicts that India will remain the fastest growing major economy in the next 3 years with a growth rate of 6.7%. Now, this is a very encouraging report.
Well, yes, it is an encouraging report for the Indian economy when a global rating agency announces that India's growth potential continues to be bullish. The reason why I'm not surprised by this bullish outlook is that the Indian economy traditionally has maintained a growth rate which is almost 3 percentage points above the world growth rates. And everybody says that the global same agencies are pointing out that in the next couple of years, the global growth rate will be around 2.5 or 3%. Now, if you take that number of 3%, and if you add to that a 3% growth rate, which is the normal differential between the Indian growth rate and the global growth rate, this is broadly par for the course. So that India will be growing at 6.5 or 6.7% in the current year and the coming years is something that is borne out by this differential between the global growth rate and the Indian growth rate. So the real challenge going forward would be how do we break out of this 3% chain reaction to maybe, let's say, 4% or 5%, which is what would be a growth rate that India should aspire for. But I am not at all underestimating the importance or the significance of achieving 6.5% growth rate. This is laudable. But remember that last year we achieved a growth rate of 7.2%. So there will be some sort of a deceleration even at 6.5%. The important point that we need to keep in mind is that India must grow at a faster rate because it needs, one, to create more jobs. Two, India's growth rate has to be more equitable and inclusive because it must be able to pay more attention to the manufacturing sector. And three, it must come from higher investment and greater government prudence. So I think all those factors, the positive factors, are in place. So India is capable of achieving those goals of higher growth. You need the right policies, you need the right investment push, and you need the right demand stimulus measures that I'm sure will be coming forth.
Okay, you mentioned about breaking free of the chain reaction of 3% and moving on to 4% if it's possible. So what needs to be done to break this chain and maintain a higher growth rate?
It's important that we reduce our dependence in terms of manpower on agriculture. Right now, what is happening is our agriculture is suffering from oversupply of workers. More people are working for a sector that is producing a lower share of GDP. So we need to take away the surplus workers from agriculture, train them, and make them ready for manufacturing and services sectors. Now, therefore, the first important thing that you need to do is to invest a lot in creating what I call the social infrastructure sectors, which are education and healthcare. And of course, I would like to add even water. Now, social infrastructure means education, creating more primary education facilities, more vocational training institutes, more engineering colleges, management institutes, so that we produce more people for a new economy for the manufacturing sector and the services sector. But to keep that workforce healthy and productive and efficient, we also need to them healthy, and therefore we need to have proper investment in healthcare and creating an infrastructure. And I was saying earlier, healthcare infrastructure has a win-win proposition because a strong healthcare infrastructure at home can also help us get into the global supply chain for healthcare infrastructure services, which are now possible to offer with the use of technology. The final point is that we need to keep investing in creating hard infrastructure, the economic infrastructure like roads, like railways, the bridges, the airports, so that and the irrigation facilities, waterways, ports. These are all very, very hardcore infrastructure, economic infrastructure, which will be needed to support the kind of economic activities that we want, particularly in both in services as well as in manufacturing. So all these areas need to be looked at very closely if you want to sustain this kind of a growth and raise it to a level to break free from that 3% equation from the global growth rate.
AKB, the economic outlook announced by the global rating agency kept India's growth forecast unchanged at 6% for this fiscal, projecting a sharp bounce back, which you also mentioned, to 6.9% in FY25 and 26. And the Indian economy grew at 7.2% in 2022-23. So, can we now safely say that the nation has recovered from COVID-19 fully and the markets are now broken shackles of COVID-19? And are the geopolitical factors also have been factored in?
Well, I think as far as the pandemic is concerned, I think certainly Indian economy its performance seems to suggest that the impact of the pandemic is behind us. If you have grown over 9% in 21-22 and then grew by 7.2% last year, and we are hoping to grow by 6 to 6.5% in the current year, then I would say the pandemic impact has been taken care of. But the important thing to remember is that this current growth projections are based on two probabilities. One probability is what will happen to the geopolitical situation, the Russia-Ukraine war, the oil prices, and global economic outlook, which will impact or influence the Indian economy's performance. So all these factors internationally are critical for assessing what kind of growth rates can we achieve, whether the Russia-Ukraine war is resolved quickly or it creates another bigger crisis, then it will have an adverse impact on India's growth prospects. If oil prices suddenly go up, India's dependence on oil is pretty high right now, is going up, it is not going down. That will create a problem. And if the US and Europe is already in the grip of some sort of a mini recession, and if US also falls a prey to that, then India's demand for goods from India and services will certainly go down. Remember that the services exports in May grew by just less than 1%. So therefore, we need to be acutely conscious of these growth challenges, I would say. And domestically, what is important to keep in mind is that the monsoon has come. They have covered the entire country almost, and they are supposed to cover the entire country by 1st week of July. If the spread is fine, if it does not affect agricultural output, it will be a positive. So that is one. And number two, if the government finances, which so far remain under check, under control, and they are doing quite well, they don't get disturbed by some electoral compulsions or electoral imperatives to spend more money, and which adversely affect the government's fiscal consolidation program. Remember, it is not just the question of center. The states are almost a third bigger than the center's size of finances. So the states will also have to remain prudent and economically responsible. So all these factors are very critical before we can realize our true potential of higher growth in this year and the next year.
The report also says that we see the fastest growth at about 6% in India. So how much role is easier monetary conditions, better global growth, strong investment momentum, and strong domestic resilience, which you did touch upon a while back, but if you could highlight these four factors and tell us how much are they contributing towards the growth?
I think it is important to look at how the monetary policy has been managed in India. I think unlike the US, where in a very short period of time, the repo rate or the interest rates went up by almost 5 percentage points in about a year's time. Of course, they were at a lower base, but they went up from around 0.5 to almost 5.5 percentage points interest rate. In about the same time as in India, it went up by only 2.5 percentage points, from around 3 percentage points to 4 percentage points to 6.5%. So therefore, it is important that India's monetary policy managers have increased the rates by a much reduced margin, and they have also declared the pause much earlier than the global money managers, monetary policy managers. So this has definitely played a positive role for India's growth prospects, because the moment interest rates go up, certainly animal spirit among investors, they get adversely impacted. In the case of India, inflation was a worry. Inflation had risen to almost 7%, but now they are back down to around 4.5% or 4.28% to be precise. So therefore, India's inflation challenges were also a little less problematic than what the US and Europe and the United Kingdom have faced. But on the whole, I would say that the monetary policy management is a very, very important tool in the hands of the government and the Reserve Bank of India to make sure that growth is not impacted while inflation does not trouble the economy. The second big point which you touched upon is the government's fiscal policy. And when I say the government fiscal policy, I mean the overall fiscal policy. Now, if you take both the government, the central as well as the state government, the fiscal deficit targets right now looks like little less than 10% of GDP is the fiscal deficit. Now, clearly they need to come down a little bit, but the good news is that so far both in the government, the central government and the states have kept a reasonable check on any sudden rise in the deficit, so that the government's borrowing from the market is kept under check, so that the private sector can actually has access to enough money to borrow at a reasonable interest rate and invest them in economic activities.
Today, the RBI Governor Shaktikanta Das has said that the central bank will make all efforts to get to its 4% target, but has said that the El Nino has emerged as a challenge and it could be a major roadblock. So what's your take on it? Because the S&P Global Rating Agency has said that the RBI is likely to cut interest rates only in early 2024.
Yeah, absolutely. I think the RBI governor is correct. It's heartening to see the RBI talking more about the inflation target of 4% instead of the upper tolerance band of 6%. So clearly the central bank is keen that inflation stays closer to that 4% target rather than stays within the upper tolerance band of 6%. Now that should give us hope that inflation worry should not affect the sentiment. That's number one. Number two, the RBI is also worried that if El Nino impacts agricultural output through unseasonal weather events, then agricultural output will suffer and rural economy will also suffer as a result. So therefore, that is going to adversely impact on economic output. So I think the RBI governor is very right in adopting a cautious approach to both these issues as far as inflation management and growth sustenance are concerned.
AKB, very quickly, your take on the employment rate which is expected to continue to improve, with estimates predicting it to drop further to around 6 to 5.7 in 2023. What's your take on that?
I think it's important that growth also creates more jobs. With the technology use, we have seen that even though we may achieve higher growth, they may not create more jobs. So therefore, it is important to, as I said in the beginning, it's important to invest a lot more in skilling, reskilling, and training and retraining of people so that they are not only more efficient, but also more effective in contributing to economic growth. And it is also important that growth results in higher jobs. So right now, what has happened in the COVID time is growth has been restored, but the job situation is still looking a little risky because we need to grow more jobs. Unemployment rate needs to come down further, and we need to make sure that growth is far more equitable and far more inclusive.
Thank you, AKB, so much for being with Akashvani and throwing light on the topic, India, the fastest growing economy.
Thank you.
You were listening to a discussion on India, the fastest growing economy. The participants were A.K. Bhattacharya, economic analyst, and Rajesh Lake, anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may share your feedback about this program through email at airnsdtalks@gmail.com